What are the biggest drivers for Chinese stocks right now?
Good evening. Thanks for having me again. I think the biggest drivers right now that we are seeing is probably concerns about economic growth. The slowdown that we saw in economic growth over the last couple of quarters is more and more obvious because of the slowing down in the real estate and somewhat much slower growth than we saw in the retail consumption. And this is something that investors are clearly quite worried about. But at the same time, China, unlike most of its peers, has the ability to basically stimulate. We have actually seen some fiscal measures being put through and also monetary easing coming through as well. They're actually going the reverse of most central banks in the world, as we saw in the 10 basis points cut that we saw. And we're probably going to see more RRR cuts later on in the year if needed, and potentially another interest rate cut coming. So I think that basing of the economic growth is key that investors are really concerned about right now.
And will we see the upside leading into those easing measures that we're expecting? When can we expect this trade to play out, given that we continue to see pressure here and there on the latest news, whether it's on Alibaba or tech regulation and so forth?
Got it. I think to your point, I think on the international investors, the biggest question mark this year is also going to be regulatory clarity after the spate of regulatory tightening that we saw in the e-commerce and internet sector. Overnight, actually this is a little bit of delayed news. The filing of the $1 billion ADR shares of Alibaba clearly created concern, and that weighed on the Chinese equity shares. But I think that's quite specific to that particular stock at this particular point in time. The key question for investors, I think, is really where the regulatory certainty, the end of regulatory uncertainty, if you will, on some of this internet and e-commerce space, because valuation has really corrected quite significantly from their peaks at this point in time.
Zhikai, going into the end of last year, property really stole the thunder from tech in terms of the most worried about sector. Are we convinced now that the ring fencing can be done effectively? Are there still really outsized risks from a messy unwinding in that sector?
I think in terms of a systemic fallout from the real estate sector, I think the policymakers still have a lot of tools to ensure that doesn't happen. The change in terms of capital structure by a lot of the capital investors obviously is a shock, and I think that is going to prevent, say, offshore bond financing from resuming anytime soon for the weaker rated players in real estate. But in terms of, are we going to see a banking crisis that's triggered by a systemic collapse in the real estate part? At this point in time, I still don't think there is a very high likelihood of that, given what levers that the governments, both at the central level and as well as the local government level, can pull to prevent that. Yeah. But you're probably going to see anemic real estate sales until sentiments turn in this particular sector.
Does that mean we should be cautious on consumer names as well, given how tightly tied household and individual wealth is really to the boom that we've seen in property?
Indeed. I think if you look at most of household wealth in China for the retail investors, most of it is tied up in their real estate investments. And obviously with real estate investments looking a little bit shaky right now, their appetite to spend is a bit weak. And you can see this reflected from the retail sales numbers that we've seen from the last few quarters. And that is something that is indeed quite worrying. But it's also quite company specific. There's still certain sectors that is still doing quite well in terms of the domestic retail sales. So it's not a broad stroke, but you really need to pick where you want to be on a Chinese Chinese consumer place right now, given the close correlation they have to people's appetite to spend with real estate. White goods obviously is going to be quite under pressure. Yeah.
Right, yeah. One of just so many, interconnected areas to new homes and real estate. In your Asia ex-Japan fund, though, I noticed that Alibaba is still one of your top 5 holdings. Is that because you see value? Are we close to a bottom? Do you see the regulatory pressures easing? Because, of course, it's regulatory pressures, potentially a stake sale from SoftBank, and also the ongoing consumption weakness story, right?
Indeed. So Baba is indeed one of the top 10 holdings in the absolute weights. In terms of active weights, it's less. So we have the stock still because on the valuation basis, we've never seen it this cheap since it gone for listing at this particular point in time. And for something that is a teens PE, generating the type of top line growth that we expect to see from e-commerce right now, we're still quite comfortable with this particular stock at this point in time. But the sizing that we have in the position has also been moved down in the past couple of quarters, reflecting the concern that we have on the regulatory side and the pressures that has been mounted of this group since the stoppage of the listing of Ant Financial more than a year ago at this point in time.